Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the 8th of May, 2023. Well, what the markets are waiting on now is the meeting tomorrow between President Biden and the two heads of the Senate, Republican and Democrat, and the same thing out of the Senate. They'll get everybody into the room. They'll talk about what's going on. Can they reach anything? You know, you're not going to be allowed to know that. The debt ceiling's right in front of you. You got Janet yelling, screaming that this will be a catastrophe if nothing gets resolved with it. So we will see where it goes. All right. And that's how I think you have to approach all this. They should find a way. I don't think they can reach an agreement tomorrow on much of anything except why not the framework for an extension? It could be short-term to July. It could be to September, the end of the fiscal year. This is how politics work. This is an election year coming up. The president's running again, right? So he's got to show the world that not only at his age is he strong, he's virile. He can hold together what he's doing. He's not going to give back from the American public anything these darn Republicans want. And the Republicans who want to seek office are going to show, no, this spending has to stop. It can't keep going. All it is 100 times of doing this and it never ends, blah, blah, blah. It's the politics at work, so look for that. Will the market, can you keep fooling the market with it? Probably not. The marketplace will get smart to what's going on. It would not want to see, I can tell you what would be the negative, that everybody walks out huffing and puffing, that there was no progress made whatsoever. You want to hear that it looks like there's a sliver of hope, there's progress being made, things of that nature, okay? That's where I think this heads. Do I give it any chance that tomorrow they smooth everything out and they don't need an extension? 99.99%. I guess I should leave a tenth of something, but that would be it. All right. So I think it's more likely what I said, leading to another meeting very shortly where they work out details or whatever they're going to work out. That's what I think the market wants to see. Anything positive kicks the stock market up. Anything negative kicks it back down. Metals will react mixed. You don't want to hurt the economy, but gold's already looking at the inflation story. We saw today what's going on here in the energies. They all had a good rally, and we had a big break today in the bonds and the notes. You're getting little corrections. Let's see if I can bring you up to date with the day's events, and I know I can. Let me bring it right here. Here's what happened at the end of the day today. You had the Federal Reserve Senior Loan Survey. So to make a long story short, you get 80 large domestic banks, 24 U.S. banks and branches reporting, and they break down what's it looking like for the loans. And basically, everything's tightening up. Is that a surprise to anybody out there? I don't think so. We know that banks don't want to do installment loans to the consumer. They talk about that in the results. And if you have my full research, I'm going to include the report tonight with it. I'll attach it to it so you can go through it on your own and just see what was said. But there is a tightening going on, and I think we all know that that is the case, and I certainly have been adamant in talking about it. Now, when we take a look at the S&P for the week, you're down almost a percentage point. It's only the first day and a quarter, not even that. You can see you've been going pretty much flat. When we look at the action here, you see the big up, the down, not doing anything. You got a higher high, a lower low pattern. That is not a trend. The market is stuck at the 18-day average of closes, and you pop almost evenly between the highs and lows of that, bordered by the lower Bollinger Band and just missing the upper band for the resistance. But again, no trend at this point. And even momentum, while it's trying to lift, it's not pointing up in a sharp manner. In the NASDAQ, you can take off that red line here because this high just cleared that one. So you got higher lows, higher highs in the market. That's the action. That's bullish. You're overbought as can be. So you're going to buy into a Bollinger Band where you only stay over that number 5% of the time? I don't think so. In the micro mini Dow Jones, you've gone from, and we can start right here, the lower band to the upper band to the lower band, back to the 18-day average. Nothing sustainable in the way of a trend. This is a churning market right now. If you don't believe me, that's fine. That's what you're in. And it doesn't make for good trading because it makes you do everything wrong. It's telling you fight the trend and go short. Fight the trend and go long, and you'll be rewarded. You'll get killed over time, in my opinion, doing that. When you look at the Russell, it is still very much in the bear camp. It keeps hitting the 18-day average and not going anywhere from that. You've got to close over that number to say you've negated the downtrend. Until that happens, the pros are using these rallies, in my opinion, to continue selling that market, period. In the T-bond market, each time you've been hitting the 100-day average, if you're not covering shorts, what are you waiting for? Okay, you don't see what it's doing each time. I know you'll be the guy that says, Ira, you don't understand. It's going to go through there and stay there. And I'll go to you. You really think so? You think you're going to stay under that Bollinger Band easy? How often do you stay outside of the Bollinger Band on that chart? Not very often. And you're going to tell me this is the time it's going to do it. I understand that. I want to be the other side of that typically. 5-year notes. You got up and over the band 4 days ago and right back down. Wouldn't surprise me if you're back at the 18-day average. Now, the trend is up in this market. So the support's around the 109 level. You don't want to take out the most recent lows here. You're still looking for higher highs. In the dollar index, I'm still very much in the bear camp. You've got lower highs, lower lows, but it's hard for me to tell you to go short into a Bollinger Band when you'd have to prove you can not only come out of the sideways action, but break out to the downside. Now, there is a way to measure breakouts. You're not there. If it happens, I'll discuss it with you. In the eurocurrency, you have a market that is trying to be bought by the pros at the 18-day average, but they're fighting momentum, which is turned down. Also, the pattern is now one of higher lows, but lower highs. I don't think you can do anything with that at this point. In the British pound, we're going to get the Bank of England shortly. Their announcement, the market widely expects that they're going to go with a 1/4-point rate hike. All the banks want to go with a rate hike and then say, no, this is it. We don't have to do any more. And as we saw in Australia, it doesn't work that way, unfortunately. This inflation is sticky. We've got to see when it isn't. Now, the first numbers you're going to see to give us an idea about that are Wednesday, because we get the CPI numbers. And those numbers, either if they unstick, then the game changes. Then I see, oh, well, maybe there is something to this idea that the naysayers think that inflation is going to peak here and drop down. On the other hand, if it stays around the 5.4, 5.5% number, those naysayers are dead wrong. It is stuck, and the Fed, it can't back off. It's got to keep going with the interest rate hikes. That's my opinion on it. In Bitcoin, higher high, lower low, coming down. Now, did you see what happened today with Binance? People tried to get their money twice during the day, and they shut them down. They wouldn't let it do it. I know you're all comfortable with these crypto firms. I am not. I think they need regulation like there's no tomorrow. I can't imagine calling my broker, send me my money, and they don't send me my money. Okay? I'm not the broker. I am a broker, but I'm talking the brokerage firms. What's wrong with them? Get the money to the people. It's really that simple. Later in the day, they said they did. You feel comfortable with that? If you do, I realize so many of you are hardcore crypto people. You don't care that it went from 70,000 to 15. Because you're going to say it went from 0 to 70. I know what you're going to say. And you're going to tell me, Ira, you don't understand. This was the correction. It's on its way to the 100,000 and then the $1 million. I hear the stories all the time. I just don't understand the purpose of this, any of these cryptos, other than speculation. That's it. You can't buy a cup of coffee with it. When I look at Brent versus WTI, by the way, I can do it in certain shopping centers that I go to. I can go to Starbucks and there is a coin dealers. I can sell gold. I know it sounds funny, but it's true. You can see how you got back over that 18-day average and you're checking it out. So this difference of $3.50 difference was too narrow. Now, the market's still in a downtrend. This is a bear market rally off markets that developed embedded readings and lost them. Before these markets get back under the most recent low, they typically will make a run when that happens to the closest main moving average. I'm saying that in WTI as well. And gasoline, if we take a look at it, just lost this embedded reading. Let me show it to you. So here's the market on Friday. Everything's still embedded. Now you're losing the reading. Now, you had something else happen today. Notice how the 18-day average just got underneath all these other averages, the 100 and the 200. That's a bearish development. Now, big time resistance there. If I'm a pro and it gets up there, I think the pros are going to hit this with both hands saying, there's my chance, there, to come back in. When you lose the embedded reading, you often make a run towards that closest moving average. I think that's a zone that you have to take a hard look at. Natural gas was oversold, correcting. It's got higher highs, lower lows. I read stories today where many of the coal-firing energy plants are now switching over to nat gas. It stayed lower for so long, and it looks as though the prospects are to stay low for so long that many are saying, it's time. It makes financial sense to make the conversion for us. We'll see what happens with that. So I'll be discussing this and a lot more, as I always do, first thing in the morning. Now, when I say first thing, folks, I get up 3:34 in the morning, I read, and then around 5:15, I start making a recording for my subscribers. Now, those subscribers, we review 40 charts. I'm looking at day and weekly charts covering all the major markets that you've got through here. The charts are in black. They have more studies than you're seeing, and I'm let loose. I'm like Atlas Unchained. Buy here, sell there, do this. Is there something to do every single day? No, of course there isn't. But do you get a lot of trades typically during the week? Yeah. There's typically there. If you have major reports coming out, I walk away from that. I always do, always will, because that's where you get annihilated and you have nothing left in your account. I consider a big report this week, to give you an example, the CPI on Wednesday. Comes out first thing in the morning. After it comes out, I'll be all over the markets. But that's what I consider. Why? Because we've already seen the jobs report, which was a surprise in strength. What if this is a surprise in strength? Well, so where's the break in the inflation? What if this is a surprise in weakness? Then the lag effect is finally hit, and traders are going to say the Fed doesn't have to keep going. Maybe they don't go at all in June. It's going to be a important game changer, potentially. Potentially. You're still going to get another set of reports before the next meeting, so I think you do. I'm going to check all that too. All right. So this is how you play it. That's how you go with it. If you want to get my report, if you're watching me on YouTube, there's a blue button that says join. Give it a click. If you want to go to the website, go to iraepstein.com under the word research, or you can move your cursor up here if you're on a computer screen where you can move that, and an icon will appear. Give it a click. It'll take you right to the area so you can get into these videos. I'm Ira Epstein. You have a good day. I will talk to you tomorrow.